Alright, I think that everything is working. So hey guys, hope you're doing fantastic in this wonderful Saturday morning. It's pretty sunny outside over here in Quebec. I'll be waiting a little bit to see if some people are there first and if everything is working perfectly as well. Just give me a second. It's the first live stream I'm making and hopefully it's not going to be the last one. So I hope to be able to make one live stream every single weeks. So I'll just wait until there's a few person on the live stream. Let me know in the chat for those that are there yet if you can hear me. I'll just wait a little bit longer. So if you can hear me, just write in the chat that you can hear me, and I'm gonna try to understand how it works at the same time. You know, it's the first live stream I'm making on this channel, and it's something pretty new for me. I'm making on this channel, and it's something pretty new for me. Alright, I'll just try to understand if it works. And it's something pretty new for me. Oh, I'm gonna increasing a little bit the sound. I think now it's gonna be better, so you can hear me well. All right, so let's start. Yes. Is it all right now? Do you hear? Can you hear me well? I'm trying to increase the sound of my mic, but I don't want it to be too high. All right, perfect. Let's start. So I see it's really something new, so you know. Okay. All right, so welcome everyone to this weekly live stream. So it is the first one that I'm making on this channel. So I'll be reviewing everything that has been happening over the last week on the market. So for the week of the 29th May of 2023. And I will be starting by watching first at what is the Edward Jones weekly market wrap. I personally recommend you to check it out every single week. It comes out, I think it's the Friday night or the Saturday morning. So it's the it's actually the Friday nights. So every single weeks they are making a weekly market wrap, which is basically a big summary of what are the important points that happen throughout the weeks. And after, for the plan that I've prepared for you today, I'll start by checking out what are the highlights that happen throughout the week. After, I'll make some quick stock analysis on different stocks, notably Telus, that is quite interesting in my opinion at the moment. I also have Tesla, Nvidia, and Copart that I want to talk about. And after, I'll be talking about the different next week events that will happen on the market. So there are the earnings that will obviously happen and that are not necessarily very interesting for next week's, but maybe some of you will find them interesting. And we also have the Fed meeting that is coming up on the 13th and on the 14th of June. So it's going to be pretty interesting to see what will happen with this event. So without further ado, let's take a look first at our Edward Jones weekly market wrap. Just before, I want to make sure that I have the comment section. So if you want to interact, by the way, use the chat. I already see that some people have used it, but just use the chat on the right bottom, so I can be able to interact with you at the same time. So first thing first, so you see what are the important takes that happen is, first of all, we have seen that with the beginning of the June we've seen that the labor market reports were coming off. So first of all, unfortunately, we've seen that in the US, the increase of the, well, I'll read it for you, but you see that the total increase, I don't know if we're going to have it over here, but they are surely talking about it. The job quit rate, it seems to fall, but I want to find, do I have the unemployment rate? Yeah. So you can see right now the unemployment rate. I think I will just open it. I have it over here, because the unemployment rate will be very interesting to understand, since it will give you a quick idea of what is the economic situation that is going on right now. So right now, let's pick the 10 last year. So let's go from 2013 to 2023. Let's go like that. So you see, overall, it is pretty much a cyclical field, I would say. So you see, right now we have some peak. So we have had a massive peak following the pandemic, where the unemployment rate went to over, I think, about 15%. So about 15% of the overall US market unemployment rate. In that case, it is for the US market, all right? So you can see that about 15% of the Americans lost their job following the pandemic. Since that point, obviously, everything started to reopen. So obviously, people started to go and shop more. So you can see that the unemployment rate has started to fall off. And right now, if we take a look at more recently, throughout, I don't know what's taking that, but let's do like that on the last year, like that. So you see right now it is pretty much stable. It's always staying pretty much about 4% of unemployment rate, which is quite low in my personal opinion. Over here in Canada, I think that in Quebec it is lower than 1% of unemployment rate, so it is very, very low. And in the US it's about 4%. So it isn't too high compared to what we saw throughout the pandemic. But I think that it means that people are working, and it is pretty great for economy. It means that the more people are working, the more money will be sent throughout the economy. And so it is a pretty good news on that side. So you have had the results that came off throughout the last week about the unemployment rate. So you see that it slightly rose to 3.7%. So it is the 16th consecutive month that it is below 4%. And this is a good news, as I told you. That's pretty much about what is the unemployment. We've had the news, I think it was yesterday, we've had these news. After that, with the wage pain and the Fed's gains, I think the labor market does have a generally. So it's always about, the big things that happen throughout the week is really the unemployment rate that came off and the unemployment news. So here we have the job quit rate. So it looks like it is going down. So we've seen some spike. I guess it was because of the pandemic, obviously. Wage versus the inflation. So, that's pretty interesting. Because, sometimes you'll be happy. One year, you're going to have a great 5%, for example. Let's say you have a 5% pay increase. Well, you might be quite happy, but if the inflation, for example, is 7%, well, at the end of the day, you'll lose some power of buying, and you won't be able to afford, for example, everything that you would have been able to afford before the pandemic. And so this is pretty interesting on that side. They are showing what is the wages. So the wages are in blue, and the inflation. So you can see that right now, since I would say about April 2022, the inflation is higher than the wages growth, meaning that you are losing some power of buy. So it is important to keep that in mind, and so it is why I think that it might cause, obviously, technically the word recession is something that people don't want to talk about too much, but at the end of the day, I think the recession comes up, if you didn't know first, the recession comes out after two consecutive two consecutive quarter of negative growth in the GDP, and the GDP will be directly correlate through the inflation, obviously, because and the wage as well, because the GDP will basically be a way of I don't know how to say it, but it is basically a way of how much the country in total is able to make money, like what is the production of money for the country. I think it's quite clear, but I can show you the full calculus, but overall it is that. So you can see obviously that When you have an economy where the inflation, so the cost of living, is higher than what is the increase of your possibility to spend money, it means that obviously people will have less possibility to spend more, and it is not necessarily something of great. So after still has gas in the tank, someone forget that strength to yeah, so that's always about the job, because at the end of the day obviously the market will be depending. If you invest for example in broad market index ETF for example, well, you'll be investing in multiple kinds of companies. So even if for example you have the earnings of, let's say, Meta that comes up and that are not necessarily great and that are negative, well, at the end of the day, if you have for example 500 holdings in your ETF, well, even if Meta hasn't been performing well, the 499 other companies in it might be able to perform well. So it isn't really important, the earnings, in that case. And in that case, I would even tell you that what is the most important is more the economic conditions, because the global economic conditions will impact the performance, obviously, of the market. So yeah, I think it's pretty much everything. We have the unemployment rate that I just shared with you, that has been for over 36, I think, months in a row, lower than 4%, which is pretty good over the last, well, since the beginning of the pandemic. And here, this is super interesting. I want to share it with you that this week on the market has been quite good overall for the market. Just before, I want to see, okay. It has been actually quite good on the market, where you can see notably that the TS6 has gained about 0.4%, so it has stayed pretty stable for the Canadian market. But on its side, the S&P 500 index has gained close to 2% in only 1 week. So it has been a pretty good week on the market, and I'll share it with you, notably with Tesla, that has gained close to, I think, over 15%, if I'm not wrong. After, for the MSCI EIFE, which is more about like Europe and all the others emerging markets around the world, you can see that it hasn't been a great week necessarily, where they've lost about half of a percent of its value. You can see after that the great bonds has gained about 1.2%. The 10 years government yield has lost about 0.1%. The oil has lost 1%, and the US Canadian exchange rate. So it is pretty interesting for everyone that is Canadian. If you are investing, for example, into US stocks, straightly into the US exchange rate, and vice versa as well. If you are American, you want to invest in Canada in different Canadian companies, but in Canadian dollars, well, the Canadian US exchange rate will be important for you to understand. So that's pretty much great, pretty much what is happening right now. Yeah, so the week ahead, important economic data this week includes, yeah, so I haven't talked about it, but the Bank of Canada interest rate, I think, if I'm not wrong, Bank of Canada meeting, June. It's the June 7th, so it means that it is on Wednesday. We have I haven't talked about it, but I'll write it there so we can talk about it later on. But Bank of Canada meeting, the same, so interest rate. So it's going to be interesting to see as well, because personally, for example, I want to buy real estate probably this summer or this autumn. And so the Bank of Canada interest rate will obviously dictate what will be eventually the interest rate that I will be paying on the mortgage. So obviously I'll be following these news on Wednesday pretty. I will watch probably the meeting, or I will watch the replay eventually. So it's gonna be very interesting, because obviously if you understand the concept of the interest rate and how the Fed and the Bank of Canada are working, is basically that they are using this interest rate that they will be putting, obviously, to have a control on the global economy. Since, for example, we've seen that throughout the pandemic, the rate over here, I think, was about 0.25%. So it was super low. And right now, I don't know exactly how it is, but it has rose a lot throughout. We have it over here, I think. Canadian interest rates. Yeah, over here. Okay, so well, anyways, I think it's. Can I just find it? If 4.5, I think it's about 4.5% at the moment, and throughout the pandemic, it was about, as I told you, about 0.25%. So you saw that it rose of more than 4.25%, and yet we don't necessarily know what they're gonna do on Wednesday. So maybe they're gonna try to increase it to try to slow down the inflation, because at the end of the day, they are increasing the rate to slow down the economy and at the same time slow down the inflation, so the cost of living out. Because if they are increasing the rate, it makes that people won't be able to spend as much money, because for example, if you have a mortgage to pay or even a loan on your car to pay, well, you're gonna have to pay more money to be able to pay it out. So it is really important to understand what is the correlation between the interest rate and the inflation. So obviously, when you increase the interest rate, you want to slow down the inflation, and vice versa. For example, during the pandemic, the inflation, well, the interest rate was super low because people were just staying at well, people were actually staying at home. They were receiving money and they were sometimes working out. So people could not even spend their money because everything was closed, but they were building up a lot of money. So it was the problem, and it's why we've seen that the inflation skyrocket when everything reopens and after the big pandemic. So that's pretty much it, I think, for the important news about this week. Oh yeah, I haven't talked about the Bitcoin, but the Bitcoin, you know, it's quite volatile, and it's with the news of Binance. I don't know if you've seen what happened with Binance. So you see that just over the last 5 weeks, it lost close to it lost 3.26%. So it is super volatile, you know, and I wanted to share with you guys because I don't know if anyone's over here, especially for Canadians, are with Binance, but there have been a pretty bad news recently that came off. So Binance, I've opened it over here. So Binance, I think it was 2 weeks ago, have actually announced that they were exiting from the Canadian market because of their regulatory tensions. All right, so you know, Binance is actually the world's largest crypto exchange. It was an exchange that I was personally using, notably to stake my crypto on, meaning that I was putting out, for example, I think I've had like maybe $4,000 on that exchange, $4 to $5,000, let's say, on this exchange. And what I was doing is basically I was holding notably some Bitcoin, some Ethereum, and some smaller coins, for example, some Cardano that I was taking, meaning that I was saying, for example, just like a bank account, if you're like giving your money into a certain bank, you will see, for example, I'm buying this coin, so Cardano, I'll keep it for 90 days, and throughout 90 days, I want to receive some great interest. And the big pros of doing that with crypto is the fact that obviously crypto will fluctuate a lot, but it has, I would tell you, because that it is fluctuating a lot, it will give you more interest possibilities. And it is something that I really would recommend for people that have more risk tolerance, because if you're someone close, for example, to your retirement, never invest in crypto because it won't be the best move for you. But unfortunately, you know, Binance just quit, so I've actually transferred my money from Binance to another crypto that I'm gonna be talking about pretty soon. But yeah, so they have quit Canada, so you need to transfer your money. It's pretty important. I think it's before the end of September 2023, so you have a few months, but do not wait until, if you are with Binance, do not wait until the end, like until the deadline, because you won't be necessarily able after that to transfer it. So I've done that in the past, and it's pretty important for you to do it as well. After the Bitcoin, the CPI, so we have the inflation, the CPI, which represent the inflation. can share it with you. We got the interest rates that I've already seen with you, but I can just present it to you right now. And for everyone that wants to have great data, I recommend you to check out the Fred website, which gives you some great data, but for the US market. But unfortunately, you don't necessarily have the same number of data, let's say, with the Bank of Canada, but the US market is usually a great indicator of the global economic conditions and situations on the market. Just before to continue, I want to make sure that I don't have any. All right, everything is working well. So I'll continue like that. So let's see from 2020, from the beginning of the pandemic, how it was. So edit graph, not that. Okay. So the inflation, so the CPI, you can see that it has been growing quite a lot throughout the pandemic. So do we have? Yeah, all right. So you've seen that it was between, usually what the Fed and the Bank of Canada is trying to keep is between a 1 to 3% inflation target. And in that case, you can see that at the moment it has started to slow down since, I'd say since September 2022, it has started to slow down, and it's starting to going down with, as I told you, the interest rate that is increasing. So those are some pretty good news, and I have pretty much nothing to add on that. Interest rate, it's the same. Now we're going to talk about more the stocks and the companies to make some quick analysis on it. Let's take a look first at the biggest movers throughout the weeks. And it's pretty interesting because I think it's throughout the weeks, I think it's throughout the weeks, but you can see over here that the top gainers in the S&P have been these companies, notably with Dish Network, that has gained about 16% in over the last week, but I don't know if it's over the last week. That's the problem. But anyways, this is pretty interesting for you to keep a look at, because it's giving you which stocks are quite more volatile, because at the same time, keep in mind that, for example, let's take the Lululemon example. You see Lululemon has gained about close to 11%, so it has been one of the biggest gainer, but at the same time, keep in mind that volatility can go both ways. So obviously in that case, they have gained quite a lot of value recently, so about 11% of gain, but at the same time, it means that since they have more volatility, it can also lose a lot more volatility. And a stock that has this aspect in it is Tesla. So Tesla hasn't gained only 3%. I'll share it with you. But Tesla is one company that personally I am massively investing in that company. I have started recently to invest massively a lot. You can see that just over the last day, so over yesterday, it has gained about 3%. And we're going to talk a lot about Tesla later on in the live stream, because I have some important news to share with you. But just over the last 5 weeks, let's just share Tesla stock like that. So you can see that over the last week, it has gained over 16% of gain. So it is incredible. You know, it's a company that is personally one of my favorites, and I think that it is worth having in your portfolio, Tesla. I think that, except maybe if you are really someone that doesn't like to have any risk, but Tesla, for me at least, it is a no-brainer. I'm not going to recommend you anything, but you know, it is a company that has a business model really acts on the future. You know, it is act on being able to develop the largest electric car companies and to develop some great sustainable solutions for people. And personally, it is the companies that I could see potentially be in 5 or 10 years apart the largest companies in the world. And so it is why it has a lot of risk. Obviously, it has a lot of volatility. But like, for example, if we take a look at the volatility, I'm going to share it with you. It has about a beta of 2. So it means the beta is sharing with you what is the volatility of a company compared to the market of, for example, the S&P 500. So in that case, Tesla is going to be fluctuating about 2 times more than the index and than the market itself. So it can be both ways. It can go up a lot more, but it can also go down a lot more as well. So that's pretty much it for the biggest movers. You see, you have the S&P 500 index where you have the top gainers, the top decliners. You have the same for the Nasdaq, the Dow Jones, and the COVID. I think it's about like COVID companies, like pharmaceutical companies, but Rush, not, I don't. Pfizer, Biogen, yeah. That's pretty much those are pretty much all some medical companies. So I really recommend you to keep an eye on this website as well. It is very informative for you. Now I'm just gonna drink a little bit of water before to continue. All right. So I think everything is going well. No questions on the chat. So I'm gonna continue. Now, so we've seen the biggest mover, Tesla. Well, actually wanted to talk about it with you guys. Let's click on the link over here. So we have, I'm not a big day traders. I think that everyone that is watching my videos knows that I am not someone that will be using a lot of patterns, and I'm not going to be using a lot of the charts to guide myself with the different investment. But if we go and analyze, because we're going to start with Tesla. After, I'm going to talk about Telus a little bit, because Telus for the Canadian dividend investors, I think that it is one of the dividend Canadian companies that is very interesting at the moment, and I'll share it with you why. After, I want to talk a little bit slightly about Nvidia, because we've seen recently that the microchips companies have been massively moving over the last couple of weeks. And I've had a special request to talk about Copart, so I'm going to take a look at it. I don't necessarily know about it, this company, but I'll be analyzing it quite quickly. And after, we'll be ending it with what are the future events coming up next week. So, first thing. So Tesla, as I told you earlier, has been moving a lot over the last week. You see, it has gained over 15% of value just during the last week. But what actually happened? Well, first thing first, we've seen that, I don't know if we are going to have it over here, but Elon Musk has been going to Shanghai recently. He has visited the different, I think it was in Shanghai if I'm not wrong, but I think it's in China. I'm not too good with the geography, but if I'm not wrong, it was in Shanghai. He had a meeting into its gigafactory in China. And so we talked a lot about also the impact of the interest rates that happened, well, the impact that the interest rates has had on the value of Tesla, because at the end of the day, as I told you earlier in this live stream, when you increase the interest rate, it means that people will have necessarily less money to put in the economy, but for everything that is about cars, it is some essential services. So we've seen that this, he has talked about it quickly in his meeting. But what is, I think it's yeah, over here. So he said interest rate have very big effect on the affordability of cars, because obviously if you have less money to invest and if you have less money to spend itself, well, you won't necessarily pick, let's say, the big Ferrari and the big BMW. You're going to focus your money into different cars that are more affordable. And it's why also Tesla recently with Musk has decided to slow down and to decrease a little bit the price of its cars. And so it was quite interesting to see what was his own point of view about that. So we talked about it, notably the demand impact for the coming few quarters. And so he has decided to decrease the price because he wanted to obviously increase the demand. And I'm going to talk about something that is more technical, so it isn't important for you to necessarily understand it perfectly. But recently, why this stock has been doing well is a golden cross. It is doing a golden cross pattern. So I'm not the best expert to talk about it, but I'm going to explain it to you. I think I've find a pattern over here. All right. So a golden cross pattern, basically, I've went to see some information about it, because personally I didn't knew what it was before I've searched on it, but it means that I can golden. I'll share with you. I'll share with you a picture. It's gonna be easier for you. Golden cross trading. So a golden cross is when you have. Can I find it? All right, over here. So a golden cross will happen when you will see that your 50 days moving average is going to become higher than your 200 days moving average. So it means that it's all come down to the volatility, as I told you earlier. So over the last 50 days, this company has been moving more and has been more volatile compared to the same the I don't it's hard to explain, but it's going to be more volatile over the last 50 days compared to the last 200 days on average. So it means that right now, over the last 50 days, it has been fluctuating more, and it is why it has become more positive. At least it is about some technical elements. I'm not a pro about that, but it is what it is with the golden cross. So it is a chart pattern indicating the potential of a major rally, because there is more volatility on the short term than on the long term, meaning that people recently and right now are more interested in that company. And you see that it kind of formed a golden cross. And the difference between a dead cross and a golden cross is that usually the dead cross will be the other way around. It means that the dead cross will be when we're going to see a potential big bearish market ahead. But in that case, with the golden cross, at least in technical ways, it means that we can see potentially a big potential bull rally in the future. So I want to share these news with you, because I think that Tesla right now might gain a little bit of value in the future. It's always something of complicated to talk about what will happen in the future, and it's why in the videos that I'm making, I'm never really talking about different chart patterns, because I don't necessarily believe hardly that it is possible for you to predict everything that will happen in the future. Personally, if you ask me about Tesla, I think that this company will obviously grow a lot over the next couple of years, but if you're talking about over the next couple of weeks, let's say before the end of the summer, will it grow or not? I can't guarantee you anything. I personally think that over 2025, 2026, I think that at that point, personally, this is my own estimate, but I think that it might grow. Maybe, I always make my observation with the market cap, and I think that by the end of 2025, it will obviously grow its market cap over $1 trillion. So it will, because right now Apple, if we take a look at Apple right now, it has a market cap of over $2.8 trillion. And so Tesla has still a lot of room to grow, I would say, because right now it's still a company that is quite new compared to Apple, Microsoft, and other companies like that, but it still has a lot of unexplored potential yet. And personally, what I love to do with this company is to check out outside, for example, on the streets. Do you see a lot of Tesla cars? Do you see more Tesla cars right now than, for example, 5 years ago? Well, in that case, it means that there are more people using those cars, and obviously that they are making more sales. And if we take a look at, for example, the total revenue growth throughout the last 5 years, well, 4 years in that case, you see that there have been a massive growth, where in 2019, its total revenue were only about $24 billion. And right now, it's closing down on $100 billion. So you see that if this progression continues to happen, and for example, if we take a look at the cash flow, which are very interesting in that case, you see that the operating cash flow were pretty low at the beginning of throughout 2019, only $2 billion, and even the free cash flow were super low. But right now, you can see that their total free cash flow have been progressing quite well, where it's reached now about $7 billion of free cash flow. So how are they making money? What is the comparison of how much they are making money compared to what they are spending, for example, for different expenditure or for different fees that they have to pay? So it is the comparison between, you make the total cash flow from operation, where you can deduct all the the expenses that you'll have to pay, for example, for the different buildings that they have, all the loans, etc., etc. So you have your free cash flow that are growing quite well, and it is a great news when you when you see that Tesla, obviously, if I go to the chart, you can see that Tesla has gained a lot of value since, let's say, before the pandemic. You see that it has gained quite a lot of value throughout the pandemic. It actually has been the best performer, I think, throughout this event. It has been worth about $400, but since that point it has still lost about half of its value. And I've actually decided to buy more shares recently. I think it was throughout the month, about over here. I've decided to continue to buy more shares because you see right now what I've been talking about earlier, the dead cross. As I told you earlier, it seems like, I'm not an expert in that, but it looks like it is presently gaining some very interesting positive momentum. So personally, it is why I've been continuing to add quite a little bit of shares of Tesla in my portfolio that I've now reached, I believe, over maybe $15,000 of worth in my own portfolio. So it's pretty close from being one of my largest position in my own stock portfolio. So just have to, you're gonna have to check out the latest portfolio update for the last month, but I think I'm close to at least 20-30 shares of Tesla, so pretty close. I think of 15 or $10,000 of value of Tesla shares. So it's why I think that right now Tesla might be interesting for people that have a long-term horizon and that doesn't have too much stress with the high volatility that this stock has. Now that Tesla is done, I'm going to talk about Telus. Just before, I want to make sure there's still no questions. All right, I think it's going well. So we're going to be talking about Telus right now. So I'm going to close Tesla. I'm going to open Telus over here. I'm going to close the golden cross just so it's not too messy for you guys to understand. All right. Bank of Canada, Bitcoin price. Let's get with it. Let's go with it. So Telus, just before. All right. Super important Telus. First and foremost, June 8th, 2023. So I think it is on Thursday. It is the ex-dividend date for the second quarter of 2023. Super important because if you are an investor that is looking to invest in dividend stocks, I think that Telus right now is interesting, and I'll share with you why. But if you want to receive the next dividend of Telus, you need to have at least one share of Telus before the 8th of June 2023. So, and you see that it announced a cash dividend of about 0.364. So if I make the quick calculus of how much it is, the percentage. So what I do is, because it is some quarterly dividend, so 0.364 multiplied by 4, so it means 1.45. If you divide it by the current price of Telus, so 25 and 73. I don't know if you see my calculator. So it means that its current dividend yield is about, well, I forget, but it's about over here. It's about 5.67% of dividend yield per year. So it is quite interesting at the moment to invest in it. About 5.67% is a lot on the long term if you compound it. Personally, what I like to do with Telus is that I own it in my TFSA and I am subscribed to the DRIP program. So it means that every single dividend distribution, I receive a couple of more Telus shares in it. And Telus, if you don't know what it is, I'll share it with you as well, because I'm sure that some of you might not know necessarily what it is, but it is more a telecommunication company's focus in selling phones and internet services to its customers. Now I have it in French, but if I put it in English, I'm going to share it with you. So you have different services that they are offering. So obviously you have it is more about phones, Streams, connected devices, your tablet. So you have internet, mobile internet. You have obviously accessories. They are selling phone as well. If you want to buy a phone, you can buy it at Telus, for example, and also have the possibility, for example, to make calls, texto, etc. You have a wireless home phone as well for people that have that, and you have other different services, but you understand what is the base. So it is really a telecommunication companies. So it is offering close to 5.67% if you subscribe to the if you subscribe to the drip program. So it means that if you have any dividends, you have enough dividends, for example, to cover the price of one share. So it means that in that case, if I make the quick calculus, it means that I have 20, let's say $26, that it costs you $26 per share. It means that if I have a dividend of $0.36, $0.36, so I'm going to be dividing $26 per 136 and 4. It means that I need to have at least 72 shares of Telus, and in that case, if I let's make a quick calculus. So 72 multiplied by 26, let's say. It means that you need to invest only about $1,872 in Telus, and with that amount, you will be able to reinvest your dividends. And obviously, this depends if, for example, Telus shares will rise in the future higher than 26. Well, maybe in that case, you need to invest $2,000 in total, but you only need, if you understand well, it means that you only need to invest about $2,000 in that company, and you'll be able to gain one more shares. And after the strategy that I personally have, I'm doing that with, I think, Telus, TD, I think BNS, and like Bell, and there is another one that I forget, but with a few companies, with a few Canadian companies that I like to put in my TFSA, I just subscribe to the DRIP program, and with the DRIP program, I say, for example, I'm going to hold these companies for the next 20, 30 years. And when I'm going to come to my retirement, well, in that case, you'll see that my portfolio value will obviously have increased massively. And this is a way for you to just reinvest all your dividends and to make more profit. So it is really like a snowball effect. So if you want to receive this dividend, as I told you, you need to be subscribed before the 8th of June. But why particularly this company can be interesting is the fact that right now it is pretty close from its 52 weeks range. So it means that if we take a look, I'm going to stock. Let's go like that. So over the last year, you can see that right now it has been massively going down. Obviously, the interest rates haven't helped them a lot, but it is a company that has been going down a lot lately. So it is pretty much at its 52 weeks low, meaning that it is at the lowest point that it has been over the last year. So it has lost about close to 20%. But nevertheless, if we take a look right now at the financials, you see it's a company that isn't growing as fast as Tesla. Obviously, you can see that their total revenue haven't been growing at the same speed as Tesla did in the past. But it is also represented by a beta. So on the volatility, as I told you, on a 5 years period of only about 0.67. So it means that if you invest in that company, I would recommend more someone that is closer to retirement to invest in Telus compared to Tesla. Because when you're close, when you're older, for example, you might be looking more for some stable dividend income, and Telus is able to offer you that possibility. Because if we take a look right now at the dividend of 5.67%, it still has a quite high payout ratio, unfortunately, of higher than 100%, but eventually maybe they cut it a little bit, but still they are still being able to pay it every single month. I think since every single quarter, I think since like 10 years, if I'm not wrong. But the big advantage of this company is that usually it will tend to fluctuate less, but right now you have a possibility to buy it at discount. So personally, I will obviously be adding a few shares probably on Monday or on Tuesday before the Thursday deadline to just increase my position in that company. I think that right now I might have about maybe like $5,000 in Telus. So it is still an important company and an important stake. Well, I still have an important portion of my portfolio in that, but it is far from being one of the largest companies, as I told you, with Tesla, and I have Raucan and companies like that that have over $15,000 of my own portfolio in it. So I'll be adding a few shares of Telus in it pretty soon. I think it is pretty interesting for that, for you to keep an eye on it. Now I'm going to be talking right now about Nvidia. I have Copart, and after I'll tell you, maybe I have 15 minutes left. I'm going to make it quick because it's my first live, as I told you. I'm not too used to it, and it's something pretty new for me, but it's going to be easier for the next weeks. And so we're going to be talking quickly about Nvidia, the Nvidia saga. After, I want to talk about Copart pretty quickly as well, and we're going to talk about the different earnings after. So starting with Nvidia, I think over here, Nvidia Corporation. All right. Okay. So right now you can see that Nvidia has recently crossed the 1 trillion market cap before giving back gains. But what is interesting to see right now is that what is Nvidia, and I'm talking about Nvidia, but it's also applying to TSMC, so the Taiwan semiconductor company, but also to different other semiconductor companies such as AMD. But what is really interesting is that these products, so the microchips, are pretty used. If we go check out, but the microchips are well used, notably to create and they are used notably in the creation of electric cars. So they are very interesting for that, for electric cars, but for everything that is electronic as well. For example, I have my cell phone. My cell phone will have some microchips in it. My computer will be also using microchips. So it is important to, these products are quite important in our daily life, and it is why these kind of companies now, with the lack in the supply that we've seen throughout the pandemic, has become very valuable for the investors. So we've seen Nvidia notably has gained a market cap. Now I don't know how much it's worth. It's worth slightly less than $1 trillion, but it is currently worth almost over, I think, the double in value in terms of Tesla. So you can see that it is a company that, in my opinion, right now I would never invest in that company right now, because if we take a look at on the 1 year period, how much it gained, you see over the beginning of the year, it has gained close to 200% of its value, and on 1 year period, it has gained over 110% of its value. So right now, I don't think that it is a good time to invest in that company, but it's just to share with you how much companies sometimes can be interesting. It can be interesting for you, not necessarily to invest, for example, in big tech companies like Meta, Tesla, and Google, that are, for example, working on AI, but you can go and invest in companies that will be indirectly using AI. For example, you have companies like Workday, so WDA, that might be interesting. You see that they are gaining some great momentum because these kind of companies are using AI in their daily use. Workday, I believe it is more about like using AI to make some financial decision-based decisions. Notably, I think that it's when it comes for the employers, for example, when it's come for budgeting, for staffing, etc. So Workday in that case can be very interesting to, instead of, for example, trying to invest in the big techs or in the Microsoft. Well, in any ways, the AI isn't. You can't invest, for example, in ChatGPT straightly in ChatGPT. You can't invest in a company that is only using AI. You can invest indirectly in companies that will be using AI. So for example, invest in Workday. You can also invest in Microsoft, in Amazon, in Google. So the big tech will be using AI in their daily use, but they won't be developing only AI. So I think that these smaller companies can be very interesting, but Nvidia right now, I would I wouldn't invest in that company right now because it you see if we take a look at its price to earnings ratio only, it's over 200 right now. It has gained way too much value lately because of its how would I say, because of its late momentum. We've seen that we're gonna come back over here. It has gained a lot of momentum because of the products that they are offering, but I personally believe that over the next couple of weeks, we'll see a readjustment of the value of Nvidia, and I think that Nvidia might drop down a little bit because usually what happens is that once a company gain a lot of value like that, like over 100% of value in a short period of time, well, it isn't really a growth that is sustainable in the long term, except if it is really like a small cap company that worth like $50 million, and it is like a mine company that have just found a new gold or new diamonds, and so they are able to open a new how would I say, a new factory, let's say, or a new mine. It means that it will have more possibility to increase the production. But in the case of Nvidia, it's a company that worth over about $1 trillion. So this growth is not normal, and it is something that is not necessarily sustainable in the long term. You won't see them gain over about 200% every single year. It's been only 6 months since the beginning of the year, so we are only about half of the year, and that's gained close to 200%. Do you really think that at the end of the year, it will have gained over 400% of value in 1 year? I don't personally think so, and I think that it is a company that, even if people were talking a lot about it recently, I think it is not a good move to invest in it right now. But if you have obviously the long-term horizon, in 10 years, it will obviously worth a lot more than it does currently. So it was pretty much what I wanted to talk about Nvidia. And so it is the same for all the microchips. If you take a look at AMD, which is another microchips, or even TSMC, which is very interesting. Notably, TSMC can be very interesting because it is in a situation where you don't even know if China will invade Taiwan. And if China invade Taiwan, it means that potentially the Taiwan semiconductor will fall in the hands of the Chinese, meaning that it won't necessarily be available yet on the stock market, and it will be more used by the Chinese. But right now, it is really an international company that is able also to give great microchips to great companies. But it's the same probably for, it has gained less value because notably of the political risk. But if we take a look at AMD, pretty sure that it must have gained, not even a lot. Well, since the beginning of the year, that's it. It has gained about 84%, so it hasn't been as great as Nvidia, but still over 84% isn't a company that I would invest in right now. I'm always looking to invest in companies that are more in discount compared to companies that have gained a lot of value that might be a little bit overvalued. So that's always my personal approach on how does I invest, and if I have the possibility to invest in AMD or in Tesla that has still been down quite a little bit since the last year, it has gained a lot of value. Well, I will prefer to invest in Tesla because Tesla, you can see that it has been down quite a little bit compared over the last 5 years compared to if we take a look at Nvidia over the last 5 years. Let's take the example. You see right now Nvidia, it is at its highest point that it has never been. So right now, it's not the place where I would want to invest my money. So Nvidia, it's great. We've talked about it. Now we're gonna talk about Copart. So we have 15 minutes left. Copart stock. So just to see, I want to make sure I don't have any question. All right, we're almost done. Copart. So I'm gonna make a quick fundamental analysis on this business. I don't really know its business model yet. How much does it worth? $43 billion. All right. So it's a quite big company of online vehicle auction and remarketing services to automobile resellers such as insurance. that looks interesting. I'll just search it. Copart. 100% online auto auctions. Okay, that looks great. So they are offering cars. And see, so they are they offering daily auctions? Okay, so I kind of see how it works. So it is some auctions if you want, I guess, to purchase different cars. So yeah, that must be a market that has been growing. Auction cars market. Do we have a, let's take the US vehicle market. It must be something that is well searched by people, because I guess that there are more and more people that have less the possibility to buy a car, because car price has skyrocketed throughout the last couple of weeks and months. So I guess that this kind of company might be interesting. By distribution channel size intends with impact of COVID and forecast by 2028. They just was valued $3 billion in 2022. Okay, so it will only gain 3 point. Let's make the quick calculus. So we got 3.82 billion, 3.82 billion less 3.21, so 0.61 divided by 3. So this project to grow 20% of value over the next 5 years. So it is great. I think it is all right. The market approach, so per year it is 3.4% of project growth, so it might continue to grow. But I think that right now, I'll go check out the financial metrics, but right now it must be interesting. Copart, so yeah, players in US vodka. So Copart seems to be in the top players, US vehicle markets. You have even eBay. I didn't know eBay is making some auctions for cars. That's great. Didn't know that. Auto Bidmaster. So see, Copart looks to still be a great in great position for that. I'll just make a quick fundamental analysis on it. So as I can understand of its business model, it is basically offering the possibility to have some auctions for different cars. So I guess that they are purchasing cars, for example, to different companies, for example, Toyota, Nissan, etc. And in exchange, they are, for example, probably, I haven't necessarily read and I don't necessarily know the company, but I guess that they are offering a certain percentage or a certain percentage of the sale to those companies, or maybe they are buying. I'll check it out. It works from the comfort of your own. But I guess that they are acquiring directly cars from companies, and after they are offering the possibility to make some auctions on it. License, search and save. 200,000 vehicles views before you want to see, before you bid. So if you want to view, I guess that it must be in your province. For example, if you're in Canada, I guess that you need, because usually, personally, me, if I want to buy a car, I will want to try it out at least first before I buy it. So I guess that it must be interesting. So I think the business model is interesting, because at the end of the day, people will always be looking for discounted when they are buying cars, and now they are trying to look for used cars, but sometimes used cars are hard to find. And if they have the possibility to go on this kind of platform where you can make some auctions, so you can just bid on, for example, the price of a car that you want, so you can go and maybe make some great discount, and it might be worth to do. So I guess that if I go look at the financials, they must have increased their total revenue lately. Yeah, so they have been able to increase quite greatly their revenue over the last 4 years. If we take the total expense, obviously have increased, but if we look at the earnings before interest and taxes, which I think is one of the most important metrics personally as well. The earnings before interest and taxes are basically the net income of a company, where you just don't you haven't yet deduct all the taxes and the interest that you'll pay, but it is a great indicator for you to see if the company is becoming profitable or not. So you can see that right now, with some earnings before interest and taxes of over 1 billion and 300 million dollars, it is still a great profitable company. And in terms of the cash flow, let's see. So you see the cash flow are more haven't well they have been progressing quite well over the last 4 years, and since the last 12 months you can see that they have slightly decreased, but over the last 4 years they've been able to progress well, so it's some great news. And in the operating cash flow, they've grown, so that's interesting. So they are still able to make some great money. If I take a look quickly, market cap, so $42 billion. So it's a company usually that is what we will call as a big company, because usually we say that companies that have a market cap of over 10 to 15 billion dollars are some large market cap companies, but it always depends like with which companies are you comparing them. So, but in that case, I would say that it's still a quite big companies. The price to earnings ratio, however, is quite high. It's about 40, so at the moment maybe it's not the best time. In terms of the profit operating margin, they are doing fantastic over the last 12 months. 30% of profit margin is pretty insane, and 40% of operating margin is great as well. Return on equity 23% for the investors over the last 12 months. That's great. The revenue, so they've made over the last 12 months, they've made about close to $4 billion of revenue. And in the last quarter, they've grown their revenue compared to the same quarter. So the first, I guess it's the first quarter of 2022, I mean. So they've grown of close to 9%. That's great. And some earnings growth in that case of close to 26%. So that's excellent. Oh, total cash, they have about $2 billion of cash and debt. Only about $100 million of debt. So that's great as well. Because usually when you are looking for companies, you want to invest in companies that do not have too much debt compared to what is their cash position, because it means that if they have too much debt, they will be depending a lot on the interest rate. And so if the interest rate will increase, well, the debt that they will have difficulties maybe to be able to pay it out. So that's something I'm looking for. That's great. They are not offering dividends. That's okay. Now, in terms of the volatility, you see that it has slightly more volatility compared to the overall market, but it is really slightly. And you can see that on the 52 weeks over the last year, it has gained about 50% of value. So that's why probably you see that we've seen that the price to earnings ratio is higher. It is because it has gained a lot of revenue lately. It has gained a lot of value lately compared to obviously what has been their earnings performance, as we've saw. And yeah, so that's a pretty good companies, I would say right now. Average volume, that's great. Float, I would say right now that considering this company, I think it is a great company. I could see with a business model like that, I could see, I don't know how they are buying the cars. Are they paying like a certain percentage of fees, for example, to the company that they are buying, or are they buying it straightly to the different manufacturers, for example, to Toyota or to Nissan? But I think that the business model is very interesting, especially right now when, and I guess it is why they've gained a lot of value, because when we have a situation, as I told you at the beginning of the live, when we have a situation where people don't have necessarily the same potential to spend money compared to others, well, for example, when we had some interest rate lower, well, when people have less money to invest, they are looking for great discounted. And in that case, I think that this kind of company might be offering a great solution for people looking for cars. So I will obviously I'm going to put it on my watch list and make I'm going to make a video on it pretty soon, I think, because there is a lot of potential to this business. And I want to make a long stock analysis on it to analyze it in detail. But definitely, it is a great company. I'll be adding it to my watch list, and so I'm gonna be talking about it in a future video, I would say. And now, just to end the live, I think it's been slightly over 1 hour that I've been making this live. So if you're still with me, I'm glad that I haven't bored you yet. Do you trade small caps companies? Well, if I trade small cap companies, I have a few small cap companies in my portfolio. I'm not necessarily trading them in the sense where I'm not trying to, for example, make how would I say? I'm not trying to make some day trading with it, but obviously, if, for example, I'm investing in a small cap companies, I know that I don't want to invest too much money in it. For example, I invest in AXQT. I don't know if you know what it is. It is the Maritime Launch Services company. So it is a pretty small company, but right now has a market cap of about $80 million, so super small. But this is a company that wants to go eventually to become a spaceport in Canada, and the first spaceport in Canada. And it is currently, I'm going to share with you. But to answer this question, I am actually buying small cap companies, but I'm not trading them. So if I'm making some great profit, I will obviously take the profits, but I always try to minimize the total risk when I'm investing. So I'm trying to obviously not invest too much of my portfolio in small cap companies, because we never know if the companies will fail or not. If we have a certainty with companies, for example, like Tesla, Google, or even the TD Bank or other big companies, let's say it is that we actually know that it won't necessarily go to bankruptcy in the near future. But with these companies, it is more like we're trying to predict what will happen. But in that case, for example, this company is great, I think, for the investors looking for some potential, because it is trying to develop a spaceport base in Nova Scotia, so in Canada, in the east. So they're trying to develop that, because in Canada right now we don't have anything that is really about everything about the astronomy. So in their case, they're doing some rocket science, but it's gonna be a company. I could compare it. I've made a video in the past on it, but it is some kind of companies that is close to SpaceX, but with the difference that SpaceX obviously is a private company that is owned by a multi-billionaire dude that has more power. But right now it is a smaller company. You saw it's worth about $50 million, and it's really acting to develop really all the astronomy the astronomy side. They are making some they'll be making some rockets to develop obviously the Canadian market on that side. So I think it's interesting. And if you want to have more detail about this company, I invite you to check out the video that I've made on it. But yeah, so I'm not trading small caps, but I'm buying small cap companies. So yeah, after so I'm not where I'm was not trading small caps, but I'm buying all right over here. So now that we've made a good overview of everything, I'm gonna talk quickly about what is coming up next week. So for the week of the 12th the 5th June of 2023. If we take a look at the different earnings, you see that on the 5th June, you only have this earnings of science applications company, so not really interesting on that side. The 6th, you have these earnings, so you have a few earnings, but nothing really fancy too much. ABM, Academy Sports, Hello Groups. So these are companies that will be sharing with you their earnings throughout the next week. So what has been their performance, their financial performance over the last quarter of 2023, so for the second quarter of 2023. Wednesday we have Campbell Soup, so if you like the soup, might be interesting. Barclays, GGL, Vera Bradley, Versa Bank, so a bank over here, I guess. Not too fancy as well. On Thursday, I mean, Toro Company, I've already heard about this company. Fuel Cell, Graham Corporation, Rev Group, Signets, Altia Group, Secure Works. So still some other companies that I don't necessarily know a lot about. And on Fridays you have Neo. So I might be checking out Neo because if you know, you know. I've had a little bit of Neo shares in my portfolio, about maybe $1,000 to $2,000, so not a lot. But lately Neo, it has been a company that hasn't been great for me. You know, it has lost a lot of value. I'm holding them a little. I'm still holding a few of these shares, but you can see that it is not a small cap necessarily company. It's worth $12 billion, but it is the same principles as small cap companies. It is a company that has a lot of risk, but while being in China, so in the Chinese market, you know, we have the political risk, so it is more risky, and it has lost like a lot. I think in my portfolio, I believe I have lost like about 60% of the value of Neo, of my Neo shares. But still, I think that it is a company that, if everything goes well with the Chinese market, it still has some possibility to grow. It is a company that has a market, a business model close to Tesla. So I'll be keeping an eye on the earnings report, but obviously I don't have any big expectations for that. So I think I won't be how can I say it? I won't necessarily be disappointed if they miss their earnings, because I believe that they might not have the best necessarily the best situation. Let's say in the electric vehicle side, I would massively more invest into Tesla or into other other American companies, for example, like Fisker compared to a Neo. So that's pretty much it for the earnings. After it, obviously, the Fed meetings and the Bank of Canada meetings. The Bank of Canada meetings, as I told you earlier, is on Wednesday. So on the 7th of June 2023. So we'll see if they will increase or not the interest rates. We're going to be discussing about it obviously next week, potentially on Saturday morning. Let me know obviously in the comment section of this video, or even anywhere. Just send me what is your preference in terms of the dates and in terms of the disponibility that you have to make those live streams. So I want to make sure to make those live streams where I know that when I know that some people will be listening. So the Bank of Canada meeting this week is going to be interesting to see. I'm going to be watching it for sure. And after the next week after, so the 13th and the 4th, oh yeah, so it's 2 days because the Americans are a little bit more fancy. So on the Tuesday and on the Wednesday of the, well, not next week, but the other weeks after, you will have the Fed meetings that I will also be taking a close eye on, especially since I'm looking right now to buy real estate because it is my next project. I might be doing a little bit less videos in the upcoming weeks because right now I am trying to find great deals in the real estate market, and I think that it has a lot of possibility, and right now I want to be able to go on the next step and make the next big move. So it is why I'm going with real estate. So yeah, that's pretty much it. I think that I've made a great overall overlook of what has been the economic conditions and the financial situation on the moment. I've made a quite big live stream. I think it has been over 1 hours and 30, I guess. I've started close to 10, so it's been over slightly over 1 hours. I wanted to thank everyone that came off in the chat and came off to watch this live stream. I'm glad that you took the time. You took the time today to check it out with me, and hopefully I'll be able to make another live stream probably next week, same hour, same day. If you have any questions, anything you want me to check out, any companies, as I've been asked to check the Copart company, if you want me to check any kind of companies next week, just let me know it in the comment section or even in the chat. I still have the chat on the right. And yeah, I'll see you soon, and I hope you enjoy the great weather outside. See you soon. Bye.